Hello traders, welcome back to another edition of Weekend Analysis. I'm Taylor Moe with True Trade LLC, and wow, yeah, it was a good, fun week in the markets. Hopefully, hopefully we weren't all blindsided by this sell. If you remember last week, we went through the SPX and we talked about why the area that we got to could be a great place for a short trade early next week. So here was our SPX. We talked about supply being found here. As we gapped down, we held for a day here, and then we had several impulsive days to the downside, with this candle really being the start of that big sell. And so this was the area where supply was found. And so we didn't quite get to the top of it, but you know what? The market is not always exact. And how we can really tell that there was a sell signal, just for clarification purposes, I was not short in this area, but on this gap down is when I began shorting the market. And so here's why. If we go back to the SPY, what we talked about before last week, we talked about this being a potential good short area because the market ran up to here and it stopped. But you know, the market knows a lot of people are looking at this area, and so they kind of gap it over, and this is what's called an island reversal. I'm sure most of you guys are familiar with this. If you're not, this is a pretty common pattern. We got kind of a similar thing over on this top where you know, the market kind of faked people out here. Everybody thought that the coronavirus was going to make the market crash. And what do? They kind of, this is a bit different. You know, they gap it up and they stay up here for a while, but it's the same concept, right? They gap it over this resistance area here. They gap it over, and then they start holding, and then they gap it above, and they keep holding, and then what do? They gap it back below this area here. So they gap it pretty far down here, and that's your signal to sell. So if the market comes up to, you know, this resistance here, or perhaps this resistance here, you want to look to sell. And so that's the same thing that happened here. We gapped over, and when we found ourselves gapping back inside of this range, that was kind of our signal to look for shorts. And so I just day traded some shorts. I'm personally not swinging short. I don't see any reason to think that this market's going to fall apart quite yet. And here's why. So here's the number that I am watching. It's 297.88. And if you just look across, you can really see the importance of this number. You can see as we came down, we closed slightly below it. And on the next day, we failed to recapture that. We came, and that was just about the high of day there, was 0.89. So that was our high of day. And then the next day, we gap over it, opening above 298. And boom, we rally. The next day, where do we find support? Low of day, 297.57, right around that area. And we hold, and we stay bullish. And this day we stay bullish. And what do we do here? We gap underneath its resistance. Right, that general area is resistance, and then we are rejected. As we come up, you can see the number that really finally gets the market really moving in the up direction is around this area. You can see for several days we're struggling to get above that number. We finally gap above and we close above, and the next day we come back, retest that area. And again, this is not a perfect science. This is not an exact number, guys. It might be a few cents to the left or to the right. It's just a general area. It might not be the exact number, but you can see as we gapped over, we finally started to go. And no surprise, that's where we came, and we started to find support on this last Friday. So for me, guys, a daily close or a gap below this area, it can send us down to the bottom of this range here, which would be 287, 285. I think another area of interest is this golden zone is 295, 293. I think if we found ourselves there early next week, we might try and bounce and then close above this number. That's a very good possibility. But if we find ourselves closing daily below this number, I think things could get kind of ugly, guys, and we could try and go get this gap, and potentially, I don't want to get too ahead of myself here, but potentially 280. Now, how do we know if this is really just it's a rope-a-dope? It's not going to lead to further downside. I think what needs to happen for that to happen is we need to actually see consolidation in more the upper end of this candle here. So we want to see more candles like this that have a long lower shadow, and not candles that are coming up here and ending the day down here. That's probably not a good sign. Obviously, a gap down puts the bullish case off the table for now. We would be looking for further downside under this number. And closing daily above this breakdown candle and above this range again, so around the 313 area, that would put a potential visit to this gap back up to this supply zone on the table. And for me, that's incredibly bullish if that happens. Even if we do continue to kind of consolidate around after doing that for a little bit, I think that ultimately means the market wants to go and test the highs if we get over this Thursday's high. So that's really our bogey. That should be strong resistance unless gapped over. So yeah, keep that in mind. Right now, the ball is in the bear's hand, and I think early next week is the key sign, guys, if they're going to do anything with this. Quick reminder, and I posted this on my Twitter, but I just want to show you guys. Throw some moving averages on a weekly chart. And I mean, just notice that we're not below a single moving average. This first one I have is a 5-period moving average, a 5-day moving average. And this is this is what I use to kind of give me a short-term trend, a picture of short-term trend. So that is still facing up. Our daily chart, I believe we're below. So we're below, and we came into the 200. And so what can happen here, guys, is we can get a lot of consolidation. It's very possible because you're going to have strong support in these areas, even higher up here. But now you're going to start having resistance up here. So what you can get here is a lot of chop. And I just want everyone to keep in mind that this is still an uptrend. This is not the likely thing to happen. What happened over here in March, not the likely thing to happen. But again, no one knows what's going to happen, so we can't just say that this is out of the realm of possibilities. But over here, we're under every single major moving average, right? We come up to test these major moving averages, and then we're rejecting them. Here, we're still coming into these moving averages that are actually sloping up. If we can hold this 50 that is sloping up, guys, that's key. I mean, this is still it's at 290, so it's another 3% drop. It's totally possible to have in the markets. But if we start holding that and we see bullish signs, if we come down here and test this area, shoot up and close the day above this 297.88, guys, that's bullish. We will go to test the top of this. We will probably go back to new highs. So keep an eye on these moving averages here. And if we're seeing some bullish reactions off of them, which I really would expect, to be honest with you. Let's look at the other indices real quick. That's pretty much all I have to say. I'm going to try to make this pretty quick. Let me just take these moving averages off. So the IWM, we talked about, guys, that these markets had come back in to these ranges right here, right? All these indices came back into these ranges, and so but they came in pretty fast. So what we wanted to do was keep an eye if they could actually hold the bottom of these ranges now, or if they were not. And so clearly we can see they didn't. And guys, if you're watching, if you were simply watching all of these indices, you'd see that a couple of them tipped us off early before the Thursday crash. Look at the XLF on Wednesday closing all the way below this gap, all the way below this gap. Very, very poor close, signaling that downside was most likely coming. We said if it got below this, it would come back to the last breakout area. So we have resistance, and we kind of struggled here, and there's the breakout. So we'd come somewhere in here to where they accumulated before the breakout, and that's what happened. So if you were watching these early in the week, you would have seen that. The DJT, guess what? Wednesday broke down. Here's its range. Wednesday, it broke down. Another signal that this market was not going to be okay on Thursday. I didn't really think we'd have that big of a drop on that big of volume, but we did. And so now the market's changed character. We have to change as well, guys. We have to realize what's going on here. Let's take a look at the VIX real quick. The VIX had a nice little wedge. We popped out of it Monday, and we kind of went sideways, and here's the Thursday pop. So the key thing on the VIX here, guys, is this zone. So it's going to be about 42 and a half is going to be around the top of it. If the VIX gaps over this, I'm telling you, we can really get going on the upside in the VIX and on the downside in the market. This is the key zone. Come back here, look. Even if we spike up, we need to close above or gap above. It has to be holding above this area. Up here we ran up. We couldn't close daily above. You can see the area's importance. We have a gap, right? We have a gap, and that's what really gets it going here. That's what really gets it going. And so we want to watch this area as we're coming down. It's not perfect. It's come slightly below here down to like the 38 area. So, maybe we extend this zone a little bit lower here. But you get the picture, right? This is an important area on the chart. Come down, stop, and this was our real breakdown of that area, right? You see a big breakdown candle. That means, that's sellers coming in and saying, hey, this area is no longer going to get bought. It's going to get sold. And that's what happens. We come up, we sell it twice. We come up, and we're still selling it. So, yes, we made a bit of a higher high here, but they're still selling the same zone. So until this gets over that area, this market can start to head back up, and the VIX can start to head back down. But what you're likely going to get after this is you're going to get some buyers down in here. And so you're maybe going to get some of this, even if it does ultimately end up rejecting, and this is just nothing in the market, then you're still going to get some back and forth, some whiplash, some high volatility days. So expect that and be prepared for that. Be careful with swings. Personally, I like, if you're going to swing some shares of specific companies that are looking good. But just be cautious with your swings. Be cautious, book profits when you have them, and be ready for anything with this, okay? If we start getting above here, guys, the market could get kind of ugly again, okay? We could see a bit more of a retrace up to some of these green levels here. So definitely keep an eye on the VIX. And if you want to trade it, VIX has options, VXX, you can trade the shares. Definitely look to trade these guys. They're very tradable, okay? Lastly, SMH, and the Qs. These are our tech proxies. Interesting, the SMH, similar island reversal, right? The gap kind of over the highs. You hold there a little bit, and then you gap below, and you get the sell. Here's what I'm looking at, though, guys. I mean, there's nothing wrong with this chart. Nothing at all. Right, this is in a clean uptrend. Here's the most recent breakout area. So here's the zone that I'm watching. If the SMH starts to close daily below this zone, I just want you to see what this zone really represents. You know, it's a big zone over here. You guys see that? So, and you know, maybe you even extend it a little bit lower here. Something like that. I don't know. But you can see the importance of this. So this is what I'm watching. 130, 137.50 in here. Yeah, about 137.50 up to 142. This is going to be a huge tell for tech, guys. If tech begins holding this, it's going to be fine. It's going to be a-okay. We're going to keep going to new highs. If tech gets a nice break, something like this, guys, is what we're looking for. A gap below, a breakdown below, some important signal here, guys. We want something like this, impulsive, high volume. It's done, right? That means tech is likely done for a while. We're going to come down to these pivots down here, right? That's going to be trouble. So short term, we would probably come quite a bit lower there. This is the zone to watch. You get a nice bullish engulfing or a hammer candle out of there. You start seeing some reversal signals on smaller time frames. Look for this to go higher then, okay? Very key index to be watching to see what tech's going to be doing, okay? The Qs broke out of the channel for a couple days here. There's the gap back below the top. That's your sell signal. And then we broke in. We broke the bottom of the channel. So this doesn't look good, right? This does not look very good. This can come down, guys. This either needs to, again, we talked about this, that it either needs to work off overbought conditions in this area, let these trend lines ride away into the distance so they can move higher. And at that point, you have this. This is our 2009 trend line, I believe. Or is it? It's a long-term trend line here. No, this is our 2018 trend line. So you can see we popped up over it here, held, and we continued higher. So what we can do now is we can, work off these conditions by moving sideways in this area, or this is going to break back down, and then we're going to have to go sideways in a much bigger range here, or even see a further correction down to a new low. So this is definitely one to keep an eye on because it's been leading. We want to see if it's now actually going to make moves to the downside, which would really mean getting below 230 and then closing certainly weekly below this trend here. Certainly weekly would mean trouble for the market. So as you can see, guys, it's a little early to be getting uber bearish on the market, but we have to be aware that some of these things can start triggering and let us know that there's a lot more downside coming. We have to be aware of that and be watching those things. I really like the SMH. I think that would be a really good signal for tech that it's getting. If we get below the zone, I think that would be a really, really good signal that tech is not looking good. But everything else, guys, we came up into this range. We rejected that range, and I can't look at that as a good thing. But with that being said, we came into it pretty quick. Okay, fair enough. Are we still making higher lows on the IWM on all these indices? Yeah, we are, right? Here's your major low, major low, major low, major low. I don't really see another major low in here. This is kind of just all up, 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 up. So maybe you consider this area to be a low in here, but really this is our last major low, and this was kind of just all up, 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 sideways, up, right? So, as long as we're holding, obviously this is a big drop, right? This is a big drop, but as long as we're holding these lows here, then we're probably okay. All right, we're probably okay. Obviously, I would like to see us, right, if we're going to stay bullish, that is. I would like to see us stay up here. I would like to see us stay up here, use old resistance as new support, and then continue on our way up. Last thing I want to remind you guys of, we talked about this in older videos, I think, but I haven't brought it up, is these monthly trend lines. These are both on the IWM and the DJT, the small caps and the transports, and there are 2009 monthly trend lines that were broken on impulsive volume, and we've talked about this a few times, saying that this is really not a good look, right? Not a good look. And we said that these could come up. I thought it might happen a little later in the month, but we could come up, test these breakdown candle highs, and see a rejection. Guys, right now it's happening, and it's a little bit worrying. We have some pretty high volume rejections already on these daily charts. This month is going to tell a lot. Where these candles close, I believe, will tell a lot. The DJT, they basically look the exact same. There's your DJT. Try to come up into this range. We rejected. We're back below now. This can stay as resistance. Here's your broken trend line. Huge volume breakdown, right? Definitely two indices to watch. It could be really trouble, guys. So, we'll revisit this in 2 weeks on the month close. It should be very interesting. Something to just have an awareness of, guys. Have an awareness of. This could just lead to something like this. Chop and chop and chop and then break up. Totally could. Or we reject and we chop for. I mean, guys, this could take a year to play out. It could. I'm not saying it will, but it could. Or we can just reject here and make a new low, and then we have a lot of work to do on the recovery, guys. It's just something to watch. It's something to have the awareness of. Everything might not be as it seems, okay? And these have been telling us for a couple of years now that everything might not be what it seems. We're not going to try to get the timing of it, but these have been making lower highs, for the past 2 years, these leading indices, as the market has just kind of been chugging like nothing's wrong. And so we always have to kind of revisit this and say, hey, maybe the market's not okay on a long-term basis. So just something to keep in mind, some food for thought, okay? With that being said, guys, that's going to be it. Just remember this important level that I believe can be very important in the coming week, 297.88 on the SPY. I don't think we want to see us closing daily or gapping below that number, or we can get some serious downside down to maybe the 290s, but I would prefer the mid 280s if we're getting below this number. Okay, guys, and 312, 313, that's our bogey on the upside. Pretty simple. Have a great trading week, guys. Hopefully you guys continue to kill it in this market. Lots of opportunity out there. So, get educated. Don't miss this, okay? Have a good one, guys. Peace. See you in the next one.